Hey everyone, we got some big news out of ChargePoint that I wanted to share with you today in this video. Namely, the big news included the new CEO and his outlook for the company and the direction he wants to take the company. Also, an updated outlook for the company's quarterly results. I know they reported a preliminary update for the quarter, but we got the official numbers and the CEO highlighted what went wrong in the quarter, why performance was so much below what they were initially expecting. So, without further ado, let's jump right into these results and the big news for ChargePoint stock investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So, I mentioned already they appointed a new CEO, and Richard Wilmer is CEO and director since November 16th. So, it's been less than a month with the new CEO at the helm. And the reason they placed a new CEO, partly, even Richard Wilmer said in this conference call, is because the performance was so poor, it was so bad that they needed to take action, and action they did. So one of the things this new CEO is doing, he was the one. He was before he was named CEO. He was chief operating officer of the company, and one of the things he was working on was new factories in Southeast Asia that will come online in sometime in 2024, and he expects them to receive benefits from that. That could be a smoother supply chain. It could be better profit margins. That remains to be seen how effective those new factories will be that will come online in 2024. I'm a little bit skeptical that they will be seeing benefits from these new factories. Remember, ChargePoint already has too much inventory. They had to take a $40 million inventory write down, which we'll talk about in this video. And so adding new factories, adding more manufacturing capacity, I'm not sure is the prudent thing to be working on right now. So we'll talk a little bit more about that. So one of the things the new CEO is also going to be working on is rebuilding their entire after sales program. This is good. This is what I wanted them to be working on. I've read a lot about and I've heard a lot about ChargePoint's charging stations not working as effectively. And then when they are defective, it takes a long time to repair. I've heard stories of owners going to ChargePoint and saying, look, this thing hasn't been working, come and fix it. And it's been taking a long time, longer than it should, to get these stations fixed. And so I'm glad to see ChargePoint's new CEO coming in, placing an emphasis on this. Reliability is going to be critical. It's going to be one of the primary issues that determines which one of these charging companies ends up being the few that win this massive market. So they're going to do this in a manner that can scale for rapid growth while improving response time, shortening total time to resolution, and increasing the quality of service, all without increasing our cost. Now, I was with the CEO here all until that last part where he says all without increasing our cost. Now, I don't know how you perceive this, but from my perspective, I think there is a small probability, in fact, a very small probability, that the company can do all that it's saying it's going to do, all without increasing their cost. Now, I'm not skeptical that it can improve response time, shorten total time to resolution, and increase quality of service, but I think that's going to come at a cost. While I think that cost will be worthwhile, I don't think that they're going to be able to do this all without increasing cost. So already I'm beginning to get a type of an impression from the new CEO in making these boastful promises that I'm not so sure how likely they are, right? Saying that the new factories in Southeast Asia are going to be positive. They're going to realize the benefits. They're going to be able to improve all of these after sales programs all without increasing cost. And we're going to see that they reiterated their profitability target, the adjusted EBITDA profitability target. So again, this is something that these EV charging companies, ChargePoint included, have been notorious for is in making boastful and ambitious forecasts and projections. And then when it comes time to hit those projections, when it comes time to turn over the cards, they say, oh, something went wrong, and they blame this, that, or the other thing and tell investors that it didn't turn out the way we were thinking. And so already I'm not happy with the direction this is going from the new CEO. So they're working on finding ways to monitor the physical station damage that operators cannot easily detect with remote monitoring. That's good news. Again, we highlighted that they need to work on reliability of their charging stations. So when they launched their operations center in August, their network was operating at 96% uptime. They've been able to improve that to 97.65% uptime. So they're working on getting that to 99% plus reliability. And I think that's a good target to have. You want to improve the reliability of these charging stations. Otherwise, consumers are going to lose trust and they're going to just skip your charging stations altogether. They're going to see ChargePoint charging stations. They're just going to skip them and move on to the next one because they don't want to stop, get out of their car, go to try and do it, and then find out that it's not working, or in the middle of the process it ends up not working. And so they're just going to grow tired of these reliability issues and just move on to a more trusted charging station. So they, as I mentioned earlier, they pre-announced their quarterly results on November 16th. The quarter was a disappointment for us, and we had initiated some changes, including changing the CEO and the new CEO getting appointed. So it's good to see ChargePoint holding management accountable, the ChargePoint board of directors holding the CEO accountable and bringing in a new CEO to change the direction the company was going, because it was not going in the right direction. Revenue in the quarter came in at 110 million, which was significantly below where the company was initially expecting revenue to come in. And one of the reasons for that, the new CEO explains, is the arrival of many commercial fleet vehicles had been delayed, and these vehicles have been slow to ramp up production. And recent data from Bloomberg dropped the 2023 forecast for electric commercial and transit vehicles by 20%. And so these fleet operators are not proceeding with investment. They're not building out the charging station infrastructure if they don't have the vehicles. And so they're not proceeding with the investment in infrastructure necessary to charge until they have a better idea of when they're going to get these vehicles that they're expecting. Another reason is there was slowdown in commercial demand combined with supply chain normalization. So in simple terms, their channel has moved back to a model where they're carrying lower levels of inventory and placing smaller restocking orders. And while this negatively impacted the third quarter, we are poised to quickly monetize any uptick in commercial demand with inventory ready to ship. And that's an understatement, with inventory ready to ship. ChargePoint's inventory is triple where it was to begin the year, more than triple where it was to begin the year, and they are eager to send that inventory to customers and turn inventory into cash, because cash is becoming a problem as well. And so they are eager for customers to order that inventory that they already have sitting around losing value, and they are really eager and they're hoping that this demand turns around. There is no certainty that it will. Additionally, there was hesitation related to the automotive labor disputes in the US. ChargePoint does considerable business with the auto original equipment manufacturers and their dealerships, and the strike disrupted their business, and their buyers kind of paused purchases and delayed that outlay. And so those are the factors that led to ChargePoint delivering a worse than expected quarter in terms of revenue, in terms of negative gross profit margin, and led to the firing of the previous CEO and the appointing of a new CEO. While I did see some positive things from this new CEO, the prospects for ChargePoint stock in the near term are not very good. They have excess inventory, demand is slowing, and their purchasers are hesitant, and I don't see the turnaround happening anytime in the next quarter or two. Longer term, they have good prospects, right? There needs to be so many more charging stations worldwide if we're going to switch to an electric vehicle fleet. The problem is in the near term, the chicken and the egg problem, where which comes first, the growing electric vehicles or building out the infrastructure, the charging stations. People don't want to buy EVs because the charging network is not as strong as they would like it to be. People don't want to build charging stations because there aren't enough EVs on the road. And so there needs to be a kind of change in that direction. And I don't see that happening soon. I think the industry got off to a rapid growth rate that I think was too fast, and it caused a lot of disruption, a lot of chaos, a lot of um, ineffective growth, inefficient growth, high costs. And so it needs to normalize. They need to get themselves into the right size, the right rate of growth in order to be effective and to grow efficiently without burning so much money, without costing investors so much money on the bottom line. So longer term, ChargePoint has excellent prospects. It has a massive opportunity ahead if it can just get down to executing, if it can just get down to execution, if it can just execute on the opportunity, it can do extremely well. However, investors have yet to see that from ChargePoint, and I'm one of them that is hoping that ChargePoint turns things around. I want to see them succeed. I want to see more charging stations out, and I want to see more electric vehicles on the road. So I'm rooting for it, and I will be posting updates as soon as I get more information on ChargePoint stock. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.